Hey there, everybody. Greg here. Let's take a look at what's going on in this mess. So, I did a presentation today on multiple time frames, and I thought a review of what's going on here today and discussions that we had in the green room based on that would be helpful for all of you to understand when things are in alignment and when they're not, and how that can present confusion when they're out of alignment. So what I'm showing you here on the left side is a 5-minute chart of what we primarily trade intraday when we look at indices. We do trade the Dow, either Dow futures or the leveraged ETF Dow, but all the analysis starts with the underlying. So the left side, you can see what's happening right now. The gray area is what's happening after the market hours, and you can see prices are moving down. So part of our discussion today was the misalignment of the 5-minute that was trending down. These are trader pivot lines. If you haven't read it, go to the Master Trader site, and under the blog where it says getting started in my name, I posted a explanation of trader pivot lines. You can get more information there. On the right side is a 65-minute chart. And what I explained in the presentation today for intraday trading is to trade when you have alignment of the 65-minute with the 5-minute. And we don't have that today, meaning the 65-minute is in an uptrend. Let's just call it more of a sideways trend. And I call it sideways because of the depth of retracement off of the low. We had that big up day, which was in a downtrend. And then there was the Trump comment about the war is primarily over, or almost complete, I think is what he said. And there was a huge move to the upside. So the depth of retracement into resistance moves our trend analysis to sideways from down. The Qs had a stronger move, and it came all the way up to this high, which you can see right there, a deeper retracement, so it showed relative strength. And the Russell showed relative weakness because it didn't even get anywhere close to that high. Nonetheless, we see that the Qs were down near support. It's relative strength. This was in a downtrend, lower low, spiders downtrend, lower low. Deep retracement moves to sideways, neutral bias. Now, the strength of that move, how prices move to one reference point to another, that attribute tells us a lot. Meaning it did not move up slowly, grinding its way up there slowly toward where sellers are. No, it ripped up there on strength, and you can see the volume down here that occurred at that time. Granted, it was based on news, but as technical traders, we're looking at the chart and saying, hey, this is what happened at the time, putting it in the context of the trend in multiple time frames. So as prices came down here, part of our discussion was, look, if this thing, because general weakness on the daily chart, which I'll take a look at, where prices could go down, what we need to see happen on the 65-minute chart is this attempt in this time frame to try and turn up, and then if it doesn't and we could get a topping tail like this over here, that would be supportive of a move to the downside. This is how we utilize bar-by-bar analysis with trend analysis in multiple time frames. We didn't have that. Here we had a pullback after this strong move up where buyers would be. And so on the 5-minute chart where it was attempting to go down, it never could really break. And it just churned around all day long. And at the end of the day, one of the things that we use as a analogy is sometimes prices go up because they didn't go down. So the 5-minute chart was trending down. Sellers were in control in this time frame, but they were trading against the upward move on the 65-minute time frame. That leads to confusion or misalignment of time frames. So now we'll see where this is tomorrow morning. And if it is down, this stays down, and we do get a failure of this buy setup, that opens up the door to downside. Now, let's take a look at the daily time frames. Flip this over here, the daily time frames. So there was all of this confusion sideways. It breaks down, the news comes out, and it rips all the way back up into resistance, and we got the topping tail day before yesterday. So that does lead somewhat of a bias to maybe it could turn, but we have to respect wide range bars moving up as this did. And so this is consolidating at the top of the wide range bar. Qs are consolidating at the top of the wide range bar. If this stays lower and we get this reversal breaking under these lows, sure, that opens up the door to downside. But if this holds here, let's say by tomorrow morning, this is back up to the highs, unchanged, and it's going sideways. Well, that 65-minute time frame that we just looked at, let's go back to it, begins to come back into alignment, and it turns up from there. Right now, things are missing, which leads to confusion in multiple time frames. The big move up, downtrend, on support. If this can continue to hold here, it could then move back up. When I say could, I know we're all looking for a definitive analysis and what defines what's going to go up or down or sideways at the time. We don't have that. So we have what we have, a misalignment of time frames, more uncertainty and confusion. If tomorrow we were to get a correction bar, something that dips down and comes back up again, hey, we're going to be saying go long above the highs. If it rolls over, as I showed you on the 65-minute, it continues down, it'll go down here and we'll have a big green bar ignored. So we're in collection mode of information, bar by bar, to see where things are going to go. And right now, the misalignment, as I've said, just leads us to either sitting on our hands or looking for intraday trades as that opportunity sets up, taking advantage of it as the time, and trading accordingly between different price support and resistance areas. Mags are holding up quite nicely. You can see here, retest, wide range bar up. It's up at the top of the range. Looks pretty good. Semiconductors, let's go look at SMH. Not great, not bad. It's in between the moving averages that moved up. Again, if we were to get, this might move down. If we had a gap down tomorrow that closed strong, that would be information that would support higher. You can see the 65-minute just marking time, doing absolutely nothing. AVGO, not bad. It's got some resistance there, but the speed at which it moved up, that kind of power, if we were to get a nice correction bar here, that could support higher. AMD, not great. There's nothing that looks great right now. I mean, I could go through a scan and find stuff, I'm sure, but that's yet for me to do that. A CRM, consolidating, making bottoming. We've been talking about, we had trades in IVG. Type that again. GV. Software, strong move up. It's just consolidating. Right now, everybody is waiting for war news, Trump effect, economic news. So trade it accordingly. As always, if you have questions, email us.